Hello folks, welcome to this week's weekly report, Monday the 3rd of May. Boy, the year is flying by. Bank holiday here in the UK today, but no rest for the wicked. We are still working. Okay, so let's have a quick look. What was going on last week? Last week was really dominated by the dollar. We had the FOMC, which is the Fed Open Market Committee, deciding on interest rates. Now, Chairman Powell, he was actually reasonably dovish in terms of his outlook. The market was expecting him maybe to talk about tweaking the asset purchasing that they're doing at the moment, maybe getting a little bit hawkish in that regard, maybe pushing up rates. But he basically steered away from that. And initially, the US dollar came lower on the back of it. You started to see a drop in these yields as well. Towards the end of the week, the dollar picked up, found some support, and actually ended up the week on a high. We've had a whole bunch of good data out of the US more recently, and of course we've got some big data coming out this week as well, which we'll talk about later. Okay, so let's have a quick look about what we're looking at this week. This is the momentum meter. Now, this is the meter that I use religiously to basically tell me where the strength is in the currencies, what currencies are being bought, what currencies are being sold. I don't know how anyone trades the Forex market without using something like this. You'll see here that the Canadian dollar, this purple line, that's basically been the strong currency all week. There's been some really good opportunities for us inside our trading room, getting along the CAD, the Canadian dollar, the loonie, and selling the weaker currencies against it. The yen was a really good trade as well that we were talking about all last week. So this shows you that the CAD has got some strength going in. This is the week, the daily chart, by the way. You'll see here the green line. I've coloured it green for greenback. That's the US dollar. That's showing a bit of a push towards the end of the week, as I've just mentioned. But interestingly enough, you've got the euro in here. The euro has been coming down. That's normally quite expected. When you see a strong dollar, you normally see a weaker euro. But the euro is basically been coming a little bit lower now, and indeed the euro does seem to be running out of steam. Just my view, nothing to trade there. Also seeing some strength coming into the commodity currencies. Commodity currencies basically being the Australian dollar and New Zealand dollar. Lots going on there this week as well. We'll talk about that when we get onto the economic calendar. And the pound basically was pretty much flat on the week. Okay, so that's the momentum meter showing basically still a strong CAD and a stronger dollar coming in, and the yen is looking rather weak, kicking the week off. So our picks this week. Now remember, these are not trade signals. You can't go and start trading these off the bat. You need to do your own analysis, and of course you need to fit your own strategy into this. This is just our bias of where things can go. They can pretty much change on a dime. We're looking at a short trade in the euro against the dollar. Dollar showing some strength in here at the moment. And you see we've rolled off this level of resistance up there. Put in a daily doji on Thursday, followed by a really bearish Marubozu candle on Friday. That pattern typically indicates a weakness in that particular asset class, and we're seeing now the euro pushing lower. So that's the euro against the dollar. Aussie New Zealand as well. Aussie New Zealand's been in a downtrend, but we've basically put in what we call a bullish engulfing pattern at a level of support. In fact, it's one of the strategies we teach inside the trading room, the naked day trading strategy, looking for a reversal. Saw one of those on Friday, that maybe should show a maybe support coming into that currency pair. So we're looking at an Aussie New Zealand buy. I'm also looking at the dollar, yen, again, dollar strength, yen weaker, risk on. Risk on basically means markets are taking on more risk, and as they do so, the yen normally depreciates as a low yielding funding currency. So we're looking at seeing a continuation now of the dollar strength against the Japanese yen potentially, and Max is looking at New Zealand ZAR as well as a potential sell trade. He's looking to zone down there around the 10. So they basically are biases. As I say, you can't go and trade these. You need to do your own analysis and put your own strategy to these as well. Let's jump onto the screens now, and I'll show you the economic calendar for the week ahead, because there's quite a lot going on this week. Come on. Okay, so this is the economic calendar. Now, I think it's really important if you're trading the financial markets that you have something like this to hand. So that basically you know what is coming up for the week ahead, so you don't get caught out. And also there are some money opportunities there for you as well, if that's your thing, if you want to trade the news. Now you can access this by going to the forexsignals.com website. Scroll down to the bottom, you'll see economic calendar, and you can access that for free. How it works is this: down the right hand side you've got the impact indicator. Anything that's red is deemed to be high impact, so it's likely to have a big impact on the particular currency. Anything that's yellow, medium and green will be low. Here you will see that the previous read, the previous number that came out last month, will show you the estimate, and of course it will show you the release when it comes out. And the way we trade this normally, if that's your thing, is that if there's a big deviation from what's expected to the actual read, then the markets can move in that direction. I know some traders like to look at that, but that's a whole different skill set in itself. If you're in doubt about what an economic release is, you can just literally click on it and it will tell you exactly what it is. So basically, if you click on there, it will tell you what this is. And this is basically unemployment. It gives you an explanation of the data read. So if you think what's PMI, what have you, you can just click on it and up will come the explanation of what it is. So not very much going on today. Later today, we do have those PMI data coming out of the US. Now, PMI, it does stand for Purchasing Managers Index. It's a forward-looking indicator. Basically, it's a survey of all the business leaders getting their views on the economy going forward. It gives us indications. Are they employing more staff? Are they investing more money in plant, machinery, and so forth? So the central bankers love to look at the PMI data. Anything that's above 50 is deemed to be an economy that's expanding. Anything below 50 is deemed to be an economy that is contracting. Remember when COVID kicked in over a year ago now, all these PMI data has got down to single figures. Now we're looking up again. Market manufacturing PMI coming in at 60.6, a healthy 60.6. Very healthy indeed. So keep an eye out on that. And just scrolling on through, later today we've got the Rba Bank Statements, basically when the central bank decides on interest rates. It's obviously it's going to affect the Australian currency. You can see here the market expects there to be no change from last month, still there at 0.1. However, it's the statement afterwards that we have to pay particular attention to, because what's in the statement can give us clues to what the central banker is thinking, their projections and so forth, and explaining why they've made the decisions that they have. So people like to read into what the central banker is by looking at the accompanying statement. Just scrolling on through the rest of the week, we've got some data out of New Zealand. Unemployment data, really important unemployment data. If you're trading the Kiwi, you need to know about this, of course. Basically tells us how many jobs have been added to the economy. It's like the early signs of an economy. If more people are being employed, more people have money. If more people have money, people are spending money. If they're spending money, up go prices. Central bankers need to react. They need to contain inflation at the predetermined levels, normally around 2%. So we do like to look for the unemployment numbers, a good gauge of the country's state of economy. Then we've got Governor Orr speaking later as well, giving us clues on where he thinks the economy is going. So keep an eye on that. Okay, so we've got some PMI data out of Eurozone basically on Wednesday, so we'll be watching that. We've also got producer prices out on Wednesday as well. That gives us a clue on what the producers are paying for their raw materials, and obviously if that's a big increase, it means they've got to put those prices on to the consumer. So again, it's another inflationary release that we pay attention to. Some more PMI data, ISM services in the US later on in the week, so we'll keep an eye on that. We've got business confidence out of New Zealand as well later on in the week. What else have we got there? We've got retail sales in Eurozone. That's on the 6th. Really important. Basically tells us if people are spending money. If people are spending money, basically means it has upward pressure on interest rates. So we'll be keeping an eye on the Eurozone retail sales. And also on Thursday, we have the Bank of England, the Monetary Policy Committee. That's basically the Bank of England deciding on interest rates again. Are they going to be moving interest rates? It's unlikely that they'll be moving interest rates at the moment. They're all going for unchanged. There's 9 voters and they're going for no dissenters. So all 9 of the voters are going to potentially vote for no change. Look, it's a big, high impact event. But then, of course, you've got the monetary policy report afterwards. They call this Super Thursday. It's a big, big day for the UK sterling. If you're trading that, pay attention. You've also got Governor Bailey speaking as well. So that is on Thursday, Super Thursday for the UK. Moving into the end of the week, we've got the all-important non-farm payroll numbers coming out of the US. It's normally the biggest event of the calendar month. We do stream it live. If you want to come over and watch it with me, do so. Just come over to the trading room. Basically, it is telling you how many jobs have been created in the US. And you heard the expression, if the USA sneezes, the whole world catches a cold. Whatever happens in the US, being the biggest economy, has ripple effects on different economies as well. That's why the market always tunes in to the non-farm payroll the first Friday of every month, usually. Also looking at the average hourly earnings as well. So they're looking for an increase of 950,000 of jobs being created. Average hourly earnings are slightly lower down there at minus 0.3, which is 4.2% last month. So we're seeing a bit of a pop back lower on that potentially. So all important. Do come over and join me should you wish to. So quite a busy week on the economic front. So we'll be paying attention to those releases as they come out. If you want to come and join us, come and do so. And you can access, as I say, this calendar by going to the forexsignals.com website. Scroll to the bottom and it is there for you. So I hope you found that useful. As you say, lots to play for this week, lots of economic data out. If you found it useful, maybe you want to come over and try us out. 7-day free trial. If you don't want to stay, you don't have to pay. We're streaming live, as you know, 5 days a week, up to 7 times a day, discussing market opportunities and so forth, and a great vibrant community of members in there as well. If that's not your thing, not a problem. I'll see you next week.